Arrears rates are going up across the country. Delinquencies are going up. These are still at low levels, but they are increasing quite rapidly.
What's happening in this space that we should be mindful of?
One thing that's clear is that this 5-year fixed rate mortgage is a thing of the past.
And what are the risks that we should watch for?
Housing is a risky investment. Prices can go down as well as up. The returns to that are still uncertain over the long term.
You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market. Welcome back to In-House. I'm your host, Joelle Hamilton, and today we're looking at the key findings from the Fall Residential Mortgage Industry Report, or RMIR for short. Joining me today is Aled Iorwerth, one of CMHC's Deputy Chief Economists. Welcome back, Aled.
Thank you. Good to be back.
To start off, I'd first like to ask you just to give us a quick overview of what the key findings are of the Fall report.
There are several items of interest in the report. I mean, obviously, we're against a background where Canadians have a high level of household debt. There are some signs of lower debt overall, but then there are also some negative signs as well. Arrears rates are going up across the country. Delinquencies are going up. These are still at low levels, but they are increasing quite rapidly. So that's why we're continuing to monitor and report on the housing system and the credit related to that.
In the spring, when you were here last to talk about the residential mortgage industry, borrowers were shifting from fixed rate mortgages to variable rate mortgages. Is that trend, are we still seeing that trend? That trend's still strong?
Well, there's a lot of mixed patterns within the data. So one thing that's clear is that this 5-year fixed rate mortgage is a thing of the past. There are more people with more fixed rate mortgages, but of a shorter duration, so 3 to 5 years. There's now quite a lot of people with variable rates as well. So there's a lot of mix and changing within the decisions that households are making. And I think that responds to the macroeconomic uncertainty. I think some people may be responding by saying they need the certainty for the next few years. There are other people that are saying, well, we think the economy is not so strong, and so we're going to opt for variable rate mortgages. But there's a lot of different decisions being taken across the country.
Earlier this year, we talked about how Canada's mortgage debt had grown to over $2.3 trillion. And that now makes Canada the most indebted G7 country. We've also seen the household debt to income ratio kind of ease a little bit or increase a bit, and interest rates have fallen. But household debt is still high. And with so many renewals coming, there are a number of risks. So my question to you is, are Canadians in a stronger position this fall?
It's a difficult call, to be honest. Canadians have a lot of debt. I think they are taking actions to try and reduce that level of debt. They are a little bit helped by lower interest rates, as you mentioned. But there's also a negative side of that in the sense that the lower interest rates are there because the economy is weaker. So it's a very difficult call. I think what we can hope for is that Canadians continue to lower their debt. But again, there is that negative side to this, that if Canadians devote more of their income towards paying down debt, that does lower consumption and lead to broader weakness in the Canadian economy. So it's concerning, and it's not very clear how this will pan out.
So now my big question is, and I think you touched on a little bit in the overview of the key findings, are delinquency rates still rising, and or has there been some relief?
Delinquency rates are still rising. Arrears rates are going up. And this is for housing credit, but we're also seeing signs of concerns in other parts of credit, such as auto loans, credit cards, and so forth. So I think despite the very large increase in delinquencies and arrears, there is a little bit of a comfort in the sense that they are not outside of historical norms at the moment. So it's concerning, but this is why we're hoping that the economy will recover. because arrears and delinquencies rates are going in the wrong direction at the moment.
And is that sort of like across the country, or is it more prominent in specific regions?
It's a pattern across the country. It's a little bit worse in some provinces, Ontario, for example, but it's a consistent pattern across the country. Arrears and delinquencies are going up, but still relatively low, but going in the wrong direction.
So you mentioned earlier that, and I also mentioned it, we are the most indebted country in all G7 countries. How does housing, though, continue to shape wealth? Because a lot of us have mortgages, which is a debt, but it's housing debt, which contributes to wealth. And what are the risks that we should watch for?
Well, I think Canadians have put a lot of their wealth into housing. It's now up to around a third of Canadians' wealth on average overall is in housing. So on the one hand, that's an important source of wealth for their retirement. And they've built up a lot of equity in their housing, which is also a good thing in the event that there is some sort of credit event, credit risk. The Canadians will have this equity in their housing to fall back on if there are really hard times. So I think that's very comforting. There is a longer term concern, however, that people need to understand that housing is a risky investment. Prices can go down as well as up. And so putting as much a share of their income into housing, it's still, the returns to that are still uncertain over the long term.
Well, this concludes our podcast today, Aled. Thank you so much for giving us the key insights of the fall edition of the Residential Mortgage Industry Report. And a big thank you to our listeners for joining us in-house. If you want to explore more, check out CMHC's interactive residential mortgage industry data dashboard and the full report. We've included the link in the episode description below. Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions. If you're learning from and/or enjoying this podcast, please share this episode, follow us, or subscribe. Reach out. Let us know what you think. Thanks for listening, and see you next time.